In an unexpected change of events, Gary Gensler has decided to retire from his position as a result of the United States Congress conducting an internal investigation through Twitter. During his tenure as chairman of the United States Securities and Exchange Commission, Gary Gensler made a veiled reference to his intention to resign away from his position. It was in a tweet that he expressed his gratitude to the agency for its 10 years of service and stressed the commitment of its team to providing assistance to issuers and investors. Nevertheless, this message, which appears to be harmless, belies a more profound story of tension and controversy that has accompanied Gensler's tenure. This is especially true in respect to his views on cryptocurrencies and continuing legal fights with organizations such as Ripple Labs. The United States Congress is exerting an increasing amount of pressure on Gensler to reconsider his strong legal proceedings against a variety of cryptocurrency companies, most notably Ripple Labs and its digital asset XRP. Congressman Patrick Manry, who has been outspoken in his criticism of Gensler, asserts that the pressure was the cause of his planned departure, which is expected to take place in the near future. As a result of his stringent regulatory agenda, Gensler has been accused of stifling innovation and capital markets. The disagreements that have arisen between Gensler and certain members of Congress about the regulation of cryptocurrencies have ultimately led to requests for his resignation. This disagreement has been the source of the rift that has emerged between the two groups. In view of the impending elections in November and the problems surrounding cryptocurrencies, there will be critics and court losses in litigation involving the Securities and Exchange Commission and cryptocurrencies. The Chairman General of the United States Securities and Exchange Commission has been entirely overpowered by the quantity of criticism that has been thrown at him in relation to the remarks and even actions that involve the agency's lack of competency, prejudice, and contempt for regulations. According to those who are familiar with the case, it seems as though the Securities and Exchange Commission has found someone to blame for the incident. A significant amount of money has been lost by the SEC as a result of Bitcoin litigation, and the SEC has severed its relationships with attorneys Michael Welsh and Joseph Watkins. During the course of this month, the two attorneys were informed that they would be terminated from their positions if they did not voluntarily resign from their positions. The fact that they took part in the legal proceedings that surrounded the litigation that Deb Bucks was involved in at the Federal District Court in Salt Lake City acted as leverage. Following his very critical comments made about the organization in March, Robert Shelby decided to take legal action in order to punish the agency for abusing its position. In light of recent events, the chairman of the Securities and Exchange Commission (SEC) committed a number of errors and was forced to write an apology after abusing his authority to an unreasonable degree. U.S. Chief Gary, who gained notoriety for his harsh remarks suggesting a crackdown on cryptocurrencies, apologized, but the agency's prejudice endures. Employees will be trained to be more cautious in situations similar to this one, Earl said, adding that the most recent decision, which made the SEC partially liable for the action's costs, was the tipping point that 2 of the 5 CS would no longer be under pressure to use cryptocurrencies. There is a zero-tolerance policy regarding cryptocurrency, according to the declarations made by the commissioners of the agency. This follows the Securities and Exchange Commission's SEC approval of an exchange-traded fund or declaration that the agency is actively working to restrict cryptocurrency and that something specific has to be changed immediately. There have also been allegations that the Securities and Exchange Commission is looking for scapegoats and is making an effort to prevent cryptocurrency corporations from abusing their authority in XRP coin court battles by taking advantage of previous verdicts, due to the fact that the official of the agency had previously made comments about cryptocurrencies. The agency did not intend to be bound by what was considered to be personal beliefs. As a result of a fresh deadline extension, the Securities and Exchange Commission was brought under the need to provide its internal regulations on the trading of cryptocurrencies. By the 31st of August in 2021, the Securities and Exchange Commission (SEC) must have received the disclosure of the internal policy that governs cryptocurrency trading. The purpose of the disclosure was to throw light on the activities of the SEC and investigate how those efforts would affect the litigation, according to persons who were familiar. The purpose of the discovery procedure, which will begin on October 15th and will reach its conclusion in 2021, was to get information from professionals who are knowledgeable in the domains of cryptography and securities. As a result of the appeal that was filed against the previous judgment that Judge Netburn issued to disclose certain government records, the date for the publishing of sensitive information has been pushed back to January 24, 2022. This revision was made in order to better understand the situation and their professional opinions regarding it. As a result of the Securities and Exchange Commission and Ripple Labs filing their initial request for summary judgment, a substantial breakthrough has been achieved in the current lawsuit process. Ripple Labs now has to file their papers by February 17, 2022, rather than September 17, 2022. This is a shift from the previous deadline of September 17, 2022. Following the motion's detailed description of the parties' viewpoints and opinions on the topic, the court accepted the brief that was submitted by the Chamber of Digital Commerce on September 21, 2022. The petition to submit a minor curiae brief was heard by the court. The petition was submitted by the Chamber of Digital Commerce, which is an organization established in the United States that promotes for blockchain technology, CW Brief BC. And Ripple Labs made their comments on the summary judgment applications public beyond the deadline of November 30th. This was done in order to provide readers with a better understanding of the opposing party's position. The court permitted the dissemination of comments from the CW brief on December 2, 2022. Their rebuttal to the petition was also included on the papers. On December 2, 2022, the Securities and Exchange Commission requested that certain materials related to the hymen be withheld. These materials included the records of the young man that were contained in the XRP, as well as any mention of them in the court filings that Riverside Labs made during the hymen. Following a lengthy legal proceeding, the Securities and Exchange Commission made a request that both records be retained in strict confidence. On June 12, 2023, the hymen files were made available to the general public for viewing. Following that, Ripple and the SEC had a conversation about the relevance of the document and how it might bring about changes to the case. The next step was to make records that belonged to William Hyman, who had previously served as the head of the Securities and Exchange Commission, accessible to the general public. This added a new facet to the ongoing legal conflict, which has the potential to have a substantial impact on the XRP+CC case. The court's decision in favor of Ripple Labs, which was issued on July 13, 2023, was a victory for the cryptocurrency industry in its fight against the United States government regulators. In spite of the fact that Judge Torres stated that the company had not broken any rules. By selling XRP on open markets, Ripple was in violation of several regulations. A lack of unique circumstances was cited as the reason for Judge Torres' decision to dismiss the interlocutory appeal petition that was submitted by the Securities and Exchange Commission on October 3, 2023. The move for an appeal that was submitted by the Securities and Exchange Commission on August 15, 2012 was granted by Judge Torres. The SEC had been in violation of security regulations with each and every transaction conducted to institutional customers. As a part of their answer to the appeal that was filed on September 1, 2023, the investment banker declarant was given until August 18, 2023 to submit their appeal to the court. It was made abundantly evident by Ripple that the SEC did not possess the essential legal power to arrive at an educated determination.